So let me first explain how to read this chart. This is slide number 9 I'm on. This chart has three things. Vertical bars show you the trailing 12-month return of Marcellus CCP. Right? This chart we've done for Marcellus CCP. In the next slide, I'll generalize it and take a stock example over a longer period of time. So the vertical bars are trailing 12-month returns from Marcellus CCP. The line chart is the NAV at any point of time for Marcellus CCP, right? So for instance, let's take the lowest point, right? Lowest point. I hope you can see my cursor. If you can't, then I'm talking about the lowest point on the line chart. Lowest point on the line chart is of 4th April 2020 timestamp. On that timestamp, the previous 12-month return from Marcellus was something like, I think, 2-3-4%, or it was a low single-digit return, right? Maybe 1%, whatever. That's the vertical bar, right? The NAV is depicted by the line chart at that point of time, right? And hence the line chart shows you what happens to your performance if you stay invested by looking at the trajectory of the line thereafter, right? So let's say you take a peak of, say, February 2020, when the line chart peaked. The performance in the preceding 12-month period was 40%. If you had stayed invested, today your NAV has gone up from around 14 rupees to more like a 16 rupees, right? So your NAV is roughly up by around 10-15%, or I think a little higher, from the highs of Feb. If you take, let's say, any point on this chart, that's the way to read it, right? Now the third variable, in addition to the NAV line and the trailing 12-month performance, third variable is the event which keeps happening on the timestamp, right? And there are lots of events. I'm sure people who've been invested in the market, they know. I mean, now we are in November. I think 1 month from now, everybody will be talking about what's going to happen in budget, right? Because budget will be 1 month away. 1 month back, people were talking about US election. 3 months back, I remember there was a weekend when the news came that multi-cap funds are going to do something and small cap funds are going to do something, and there's going to be a big shift, multi to small or small to multi, and markets are going to go haywire, this, that, or the other, right? And these things keep happening, and we've sort of put some events here, but at any point of time, these events on a rolling basis keep coming through. And I mean, that's how human mind works. We always remain in a mode of either panic or euphoria when it comes to what's happening around us. So when you consider the 3 points, which is at any point of time, there will be a reason to panic. At any point of time, you will be sitting on a healthy historical performance. And at any point of time, if you stayed invested, the subsequent line chart is going up, right? If you combine those 3 things together, you will see that over the last couple of years, booking profits by looking at the profit that you are sitting on unrealized and the event that you are facing, basis which maybe you are worried about the future, booking profits has never really made true sense, right? So that's a message from this. If you, and obviously, I mean, this chart is only for a 2 year period. 2 year is short. 2 year is specific to only Marcellus. So let's just look at a much longer period. Slide number 10 here shows you what would happen to an Asian Paints if you were to do the same thing, right? The vertical bars are the trailing 12-month return of Asian Paints' stock, right? All these things you can quickly read by yourself. At any point of time, you would be either worried about the PE multiple, 52-week highs, the crude oil price, some acquisition that Asian Paints did, some news flow that the promoters are fighting, some news that there's been a capacity expansion from competition. Maybe the promoter family members have resigned, and you saw a lot of that over the last 12-13 years, right? It just does not stop. The reason why you should exit from Asian Paints, book profits, seek a lower entry point, that reason just keeps coming with a very good frequency, right? But the interesting point is, despite the fact that you always sit on a profit, on the trailing 12-month basis, and there is always a reason to book profits, the line chart of Asian Paints shows you that the subsequent period would have always given you higher and higher returns, right? This happens basically because it's a consistent compounder. If you're compounding fundamentals consistently over a longer period of time, these events, which the fundamentals have already made redundant, these events will have no bearing on the share price. And hence your decision to compound, book profits or time entry exits is always going to be futile. And this is the reason why, going back to the Mr. Mortal, Mr. Gifted exercise, the difference between Mr. Mortal and Mr. Gifted for bucket C or for CCP companies is very narrow, right? This is not the way a chart would look for a bucket A company, right? And the names are there. You can build charts very easily. It will now, so profit booking will make sense for bucket A, but not for bucket C.